All right, next we've got David Childers. What's up, man? How are you?
I'm good. How are you doing?
Good. How's keeping current matters?
We're well. We're well. It's good to be on today and get to spend a few minutes together.
Yeah, I always love your updates because I take lots of notes. By the way, one of your updates, what was it? Let me tell you. I'm gonna do a cheat sheet here.
Okay.
I'm gonna log in to Keeping Current Matters really quick because I listened to your July was it July 10th session
Right.
that you
Right.
recorded,
Market update. Yep.
the market update. I listened to it. I'm just going to show people. I'm just trying to load it on the back end. Here, I'm here. I'm going to show what I did because it was very valuable. I already got feedback from my clients. This is why I'm doing this. I'm going to share my screen. All right. So on my end, it's not loading correctly, but right here, let me see if I can load this one. Yeah, it's not loading correctly on my screen. But right here would be David Childers and his latest video. And with that, I listened to it all. And as after I listened to it, I downloaded the PDFs or the slides. And I literally went through the same spiel he did. I tweaked a little bit. And we sent it out to our client database that we
Yeah.
have. And I got some great feedback. So I love that you just outline everything there for us, man. It's not loading on my end, but you're about to give it to us anyway. What's the update?
Sure. Well, I think Tristan, right now there are three things that are happening in the market that I would say is sort of defining this market. One, we know inventory is rising in just about every market. Some markets maybe not, but inventory is rising. We know that. That then causes things to happen. Takes longer to sell a home. The market starts to sort of shift. And even as Ashley was talking, I think setting the expectation is critically important for a seller or buyer right now. But inventory rising, that's having an effect. It's having an effect on price, right? We're starting to see markets that are down year over year. I'll talk about that. I'm not going to go into this deep today, but I think there's also, an element of, that causing listings to expire, things not selling. We've talked about that before, Tristan, expired listings. But I think inventory rising, taking longer to sell, having an effect on price is the sort of marker of what's happening today. And then I think most are wondering, what's the rest of this year going to hold? I'll cover that as well. We've got a lot of updated forecasts now that we're here. It's July 22nd. We're right, middle of the year, and many are wondering, what's the rest of this year going to look like from a sales perspective, from home price perspective, mortgage rates, certainly a big topic for sure in that. So that is my plan. We ready to get started?
Let's go, buddy. Interested
Perfect.
or
I'm
committed?
gonna back that back. We'll get into interested and committed in just a minute.
Okay.
But hey, before I get started, I wanted to say a couple of things. First of all, grateful for Lofty and for you, Tristan Labcoat, for putting this on to get a chance to spend a few minutes with everybody. I'm gonna give you a lot of things here for the next few minutes. I'm gonna give you all of these slides. I'll show you how to grab them so that you can use them. And that's my ask, maybe as we get started, is that you do use them, that you get them out there in the hands of your clients, and you talk about what's happening in this market. Because I believe there's probably never been a better time to be the expert and be the one that's out there delivering knowledge than right now. I think a lot of people are wondering, what this market is going to be all about. Two things that I would say about that. First, one, get out your phone, take a picture of these slides if you want to. Maybe post it on social, tag Keeping Current Matters or Lofty or Labcoat. Get the message out there. That's my ask. And two, write this down. Something I think about a lot, and I want you to consider as we go through the time, if you have something to write with, is this question that I think about a lot in our business right now. And it's this. It's, do I, and this is you speaking this as yourself, do I have a relevant market opinion based upon fact? Do I have a relevant market opinion based upon fact? Because, Tristan, we live in a world right now where there are a lot of opinions. Number one, a lot of opinions about real estate. right? It's the one topic that you can take anywhere, and somebody's not in our business, but everybody cares. Should I buy a home? Should I not buy a home? Are prices going up? Are they going down? Or what? Whatever it is, what the home sold for down the street. There's no way it's worth that, or I can't believe how much prices. Whatever the topic is, everybody is interested in hearing about that. And the question is, do I have a relevant market opinion? And this is the trick, based upon facts, because most of the opinions that people have about our business are not based upon facts. They're based upon something they think they might have heard or something they read online, which may or may not be, accurate. And so we want to be able to give them the reality of this is what's happening in this market, and this is how you navigate this market, given what we see happening and given the facts. And I add that slide up here. The other thing I'd ask you is, right now in our business, are you interested or committed? I've had the chance to speak to a lot of agents over the last couple of months, and some committed. I think committed agents right now are winning. That are committed to sharing the message, are committed to marketing differently, or committed to getting out there and having more conversations. A lot of people are interested right now, maybe haven't made that commitment. And I'd ask you that today. Are you interested or are you committed? And if you are committed, take action with what we're going to talk about. But let's maybe hop in with that as a backdrop and talk about this market, talk about what's happening. I will promise you will find something in here that will be valuable, that you could educate someone with. And listen, a lot of this may not be, you may not go, David, this is something that I had never heard before, right? I may tell you things that you've already known, but listen to this. Listen, why just tell someone when you could show them? That's why we exist at Keeping Current Matters, to give you what you need to show people what's happening in this market. So biggest story, if you were to ask me, inventory topped 1 million active monthly listings for the second consecutive month. Happened in May, and then in June. We'll get the July numbers here shortly. But if you look at this is sort of, and I'll break it down in just a minute. The white bar there is this year. We're up above the last 5 years, going back to 2020, and we're starting to see inventory rise. A lot of reasons for that. But the main reason for that, the rise in mortgage rates that happened a couple of years ago, slowed down the business, and we're seeing inventory rise. If you were to look at this as a sort of a bar graph right here, this is what this looks like. Just to put this into perspective, this is June of each year going back to 2020. So we go through 2020, the pandemic, if anybody remembers that. 2021, we sort of deplete inventories. Everybody rushes in, mortgage rates fall, and everybody wants to buy a house. And active listings have grown each year following that, right? Just over 1 million, almost 1.1 million active listings in June, compared to in 2020 about 870,000. You see right there. So it's having an impact. It's absolutely, making its mark on real estate right now. And, listen, if you're in a market, which is going to be the majority of them, not all of them, I'm not saying every market's the same, majority of markets where inventory is rising, I want to use this to set the expectations with my sellers, right? Because sometimes, Tristan, somebody might think, hey, we're going to sell the house in 2 days for 50 times what we bought it for. And that may not be the case right now. It may take a little bit longer, maybe a price concession or something like that. We're seeing concessions come back in the market. I'll cover that as well. But we want to set the right expectation with people as inventory rises. What's also risen, this is June of each year, going back 5 years, days on market has risen. Right. So as you start to see the velocity kind of slow down a little bit in our business, you see that happening. And again, I think it's all things that we all feel and know in most areas of the country. And I'll show you in just a minute, not every other country are created equal. We're seeing definite discrepancies between the West and the South compared to the Northeast and the Midwest in what's happening. But I want to be able to bring a visual representation, and you can pull all this information inside of KCM as well for your local zip codes or city inside your your MLS or wherever you grab data from, and just show people this is the reality of what's happening here in our market. I don't know why this one. Can you see that, Tristan? Or it looks like it's
No. I'm missing I'm assuming a map. Am I missing a map?
Yeah, there's a map right here, and I don't know why it didn't upload when we uploaded this, but the reality is, if you look at this kind of stayed in here. If you can see my cursor, in June, if you see that bottom right there, 20.7% of the listings had price reductions. I can tell you areas like Arizona leads the way, more than that. I think Colorado and some Western states, more price reductions out West. But we're starting to see this return of things being overpriced, or things, the market not bearing what somebody thinks their home is worth. So you kind of back up, and let's go back to where we started. What's happening? Inventory rising, taking longer to sell a home, and it's having an effect on price. There is no doubt that is the path that this market has taken. I'll tell you, in most places that I've been talking to agents, if something's priced right, it's selling fairly quickly. I'd have to guess the same is true maybe in your market, Tristan. I don't know if that's true in Malibu, but I don't know what priced right is there. Is that 14 million?
LA, Ventura County, if it's priced right, it sells pretty.
It's selling, right? So most of the things that are accumulating on the market are probably overpriced. This is an area too to have an honest conversation with the seller. And say, hey, this is what's happening in the market. But if we kind of back up and go here, and I'll take us back to the inventory topping 1 million units. I've kind of highlighted that green bar there. If you see it, white is this year, green is last year, and so we're sort of running parallel to last year, roughly about 20% more in inventory growth year over year. And this is why this is important. Take a look at this, Tristan. I don't know if I've shown you this and all the conversations that you and I have, but if you play that out, we sort of end up down here. Okay, so that's sort of if what happened in the first half of this year were to happen in the second half of the year, we end up. And you see those sort of grayish bars there, 2017, 2018, 2019. I call those the last 3 normal years in real estate. We sort of end up in active inventory in the same ballpark as those 3 years. And it's a very clear visual. Listen, if you kind of pay attention to this, of a 5-year cycle in real estate. And very clear, red here is the red bar there is 2020, then inventory gets depleted. Now it's coming back after mortgage rates falling and all that we know about the business. So I'm not suggesting you want to break this out with somebody, a listing appointment or a buyer consultation or anything like this. I want you to have the confidence to say, hey, here's exactly what's happening in the market right now. We're seeing inventory return, and most places, there's this debate, buyer's market, seller's market, how many months is that, all of those kinds of things. But I would say this: we're entering into and are in probably a more balanced market. Okay, that's the first point I would make: a more balanced market. Are there pure sellers markets and pure buyers markets today? Absolutely, but by and large, a more balanced market. But here's what's more important. We're entering in a more healthy market. If we're honest with ourselves, the market in 2020, the second half of it, 21, 22, were very unhealthy. Made some money, and if you're on the call today and you weren't in that market or you didn't make any money, then I'm sorry. That's the truth there. But they were unhealthy real estate markets. Things were selling, so fast, and there was no inventory to be consumed. People abandoned their search, right? In those markets, we remember it. We're entering a more healthy market, and if we pay attention to it, we can show people exactly what's happening, exactly what's going on. I can, it's interesting. I just recorded a video yesterday that was on a similar topic. But this past presidential election cycle, which, we're coming up on the fall, it'll be a year, which is hard to believe, that was a year ago almost. Yeah. It was the first election cycle that podcasters had more influence than media. in traditional, you turn on, it used to be like Dan Rather or whoever, it on the news. But we live in a world now where increasingly people that are known and trusted have more authority and more sort of influence than what we traditionally think of media news outlets. And so the reason I bring that up is sharing information like this on social and wherever we share at YouTube and getting the message out there helps people understand, and they're likely to trust that more than what they open up the newspaper or read news on an app or however they consume things these days, to go, okay, as long as I deal in facts. The one thing that I believe happened 5 years ago in COVID actually is people said, I want to know. I want to know what the facts are. Then I'll make my own determination. I'll make the best decision for my family or for myself or whatever it was. We all remember that. But right now, what I want to do is I want to give the facts, and I want to apply my expert opinion. Remember, we started off and I said, do you have a relevant market opinion based upon facts? So if inventory is rising in my market, how do I then help somebody decide what's the best move? If you're selling your home, if you're trying to buy a home, set the right expectation. Everything that Ashley was talking about, we spent this much time working on the transaction, or here's what's happening, or here are the mechanics of it. Certainly, I think are critically important, and the one that we want to get that out there. But let's keep this going. The reality is, the way you read this graphic, the blue bars are how much inventory has grown year over year, so over the last year. The red or green bars are the measure against pre-pandemic levels. So let's start on the west, the far right. Inventory has grown 38.3% in the last year, but check this out, up 11.4% since the pandemic. That's huge, right? Inventory has recovered, as compared to the Northeast, up 17% year over year, but down 51% from pre-pandemic levels. So these markets are not all operating the same way. A lot more inventory out west and down south than there is in the Midwest and the Northeast. And so when you start to study this, you go, okay, I can start to see, and there's, I think it's important right now, and you may be listening going, well, that's not how my market's operating, or that's not what's happening here. Okay, I hear you. But every agent, every great agent needs to understand the national market, because whenever your client turns on however they consume news or where they see things, they're educated sometimes at the national level. We need to say, hey, in the West, inventory's up, or in the Northeast, inventory's down. You may be hearing that things are selling, taking longer to sell, but not here where we're at in New Jersey or whatever the case is, and be the local expert with this. Housing Wire said this: sellers also need to adapt to a high inventory environment. Pricing too high can backfire. I believe it is if buyers have more options. Offering incentives like closing cost credits, rate buy downs, similar to those used by new home builders, can make a listing more competitive. We're certainly seeing concessions come back in. National Association of Home Builders, the latest survey revealed that 37% of builders reported cutting prices in June. That's the high. Let's check this out. The highest percentage since they began tracking this figure in 2022. So definitely, I mentioned, hey, this is happening. It's having an impact on the market. And I will tell you this, there's almost 10 months of new home inventory ready to go right now, right? Inventory on new homes, newly built homes, is higher than it has been in quite some time. So builders are dealing, right? We know that they're buying down rates, they're offering concessions, they're doing all the things they can do to navigate this market. And so we're certainly seeing that. If you look at this, builders cutting prices, this is April, May, June. So you see a little bit of a progression there. They're like, maybe we should, and do it a little bit more frequently. So no doubt, all these dynamics that are sort of impacting this market are happening to new construction. They're happening to existing homes. I was a mutual friend of ours, Tristan, Curtis Finn over at Red-X. I was talking to him just a few weeks ago, and year to date, expired listings are up, I believe, 17.5%. The expired listings are up, meaning, obviously we know what an expired is. The price likely was priced out of the market, didn't sell. And, you've done several things, I know, at Labcoat with Red X
Curtis
and
Red X.
with Curtis, and they have all the data on what happens to a home once it expires, when it relists, all that kind of stuff. But it's definitely having an impact. It's definitely making its mark on our business. And it leads me kind of maybe to the second point. You may have heard of, this was the graphic that Redfin posted on a buyer seller imbalance. The green bar there kind of going up sellers, the blue bar is buyers. You see the sort of delta between it. More folks trying to sell than people can buy. I still maintain
that made the rounds.
People that want to buy a home right now, but just can't afford it. Affordability obviously weighs heavy on consumers right now. But no doubt, people want to buy a home. They just don't know how, or kind of go, look, it's out of our reach. I'm not suggesting that people could, but they don't know how. I think there are some areas for unique products, and maybe folks don't know how much down payment they need, or think they need more than what they do. But the bottom line is it's harder to buy a home, and that's caused this imbalance. So Associated Press says fewer buyers mean less competition for home listings, putting more pressure on sellers to dial back their asking price and other concessions to help get a deal done. It's obviously a stark reversal. This is when we start talking about how do I set the expectation. It's talking about these things. These are the dynamics that are happening in the market. The old phrase, there's not good news, there's not bad news. It's just the news. And sometimes, we may shy away from saying these things because it can come off negative, or something like, no, it's great in real estate right now. Well, no, there's some things happening that we want to show people. ICE, which processes a ton of mortgage applications, we continue to see an inflection in the housing market as home price softens, expanding beyond the Sun Belt into the West. Inventory levels begin to normalize across much of the country. Prospective home buyers are finally beginning to see some long anticipated price relief. We'll see if that continues. I think most people, that don't own a home, sort of got left off the merry-go-round. I hate that, in the last few years as prices went up. I don't see a dramatic fall in price coming here in this country. We'll get into that in just a minute. But no doubt there is a buy opportunity forming for people that have the ability to go out and buy. But the message probably, truthfully, is that home price growth is decelerating. I think we'll see probably flat growth or anemic growth this year, and I'll get into it in just a minute. And some of the revised forecasts that we have, prices are still appreciating nationally, just at a very much lower rate than what we saw. I don't know if you can see my cursor on here, back during 21 and 22, when we were knocking on the door of 20% annualized price growth in homes in this country. They're not, home price is not decreasing, it's decelerating right now. I don't see it. I'll show you a couple of people that are calling for prices to slightly fall, but probably largely remain even year over year. National Association of Home Builders said home price growth slowed in the first quarter, partly due to decline in demand, increase in supply. Persistent high mortgage rates, increased inventory, combined with upward pressure on house prices. These factors signaled a cooling market following rapid gains seen in the prior years that we talked about. So seeing this market certainly operate differently. This is the big story that's out there. We shouldn't shy away from it. 22 of the largest 50 markets have more active listings on the market than they did pre-pandemic. Remember, we talked about that in the South and the West. And oh, by the way, it's having an impact. So this is a look from Resi Club and Lance Lambert. They do a phenomenal job there. I would say, even the markets that we saw, these 22 markets you see there in red, led by Tampa, Florida, and Phoenix and Orlando. A lot of Florida markets over there. The majority of those are down 3 to 4%, maybe. You see the top two outliers, 5%. I will tell you this, couple things that are interesting about this. You can say with confidence. Hey, Lori, see that? Grateful for that. Here's something you can say confidently. Every state and every city in this country is up on price over the last 5 years. The markets that are down saw enormous price appreciation in the past 5 years. You take Phoenix, you take Austin, Texas, you take Tampa, Florida, or some of the markets in Florida. Punta Gorda is always one of the ones that's listed as sort of the leader in coming down in price. A lot of those markets went up 60, 70% in the last 5 years. So if you had any investment and you said, listen, it's going to go up 70% in 5 years, but it's going to come down 5% the last year, are you still in? Most people would go, I'm in, right? It's still a positive thing. I would caution you to keep that into perspective. The way this is played out in the media is people go, okay, is this a precursor for what's going to happen across the rest of the country? I don't tend to think we're going to see this massive fall, and it's not supported by data. The Home Price Expectation Survey, which sort of forecasts this year and 5 years out, has forecasted very normal price appreciation, 3 to 4% in the coming years. So I don't see this departure to, a la 2008 in what's happening with prices. But the question, and I know I'm kind of running through this, I'll pause for a second, Tristan. Any questions coming in there? Anything you want to add to that before I hop into the second half?
One thing, because you and I talk about this all the time, right? We're always sharing data, slides, information.
Yeah.
One thing that always comes up is people, when I post on TikTok, so I have this daily real estate news. I get people in there saying, "Oh, you're wrong. It's going to crash. It's going to crash. Everything's going to die." Right.
Sure.
And I always like to show or remind people that 2008, we had 4 million active listings, right? 4 million. And right now, we're at what is this? 1.2, 1.3 now?
Active's not even 1.1. Remember we said it just crossed over.
Yeah. It's not even close. And I think that the key understanding is that in what we're watching is that it is a completely different market when you're looking at the South and part of the West, not even all of it, and then the Northeast. It's almost like you have three markets. And the market down South, I think, has been, and this is from your slides, by the way, David. When I studied the slides and the information that you guys created, I noticed that a lot of these areas that are being pushed with more and more inventory, which is causing prices to come down because it's also unaffordable, is also areas that have a high amount of new construction.
Oh, sure, right.
And so that adds another layer to it. And when we look at the Northeast, which not a lot has been built, right? The demand is still high.
There's just not space for it. I mean, that's the ultimate, issue.
Those prices are still going up. Days on market is still crazy. And then in the West is where you have a mix because you're watching Las Vegas suffer, right? All of a sudden, Las Vegas is suffering. And then parts of California, it's like Jekyll and Hyde. It's like some parts are suffering and then some parts are doing crazy amazing. Yeah. It's a very interesting world, man. That's all.
Yeah, I think you're right. It's operating, in very, very different ways. And I think right now the opportunity in that is we can bring clarity to what's happening right where we're at, right? You may be hearing this, you may be hearing that, a lot of things different happening. And I think you could do the daily piece going, hey, here's what's happening today. Here's the number of homes on the market. Here's what's happening in the mortgage market. Here's what's happening, buyers, sellers, whatever it is, to help people sort of, clarify it because there's so much confusion out there of what's going to happen. So let's hop in here. Second half of 2025, give you some updated, forecast so that you have clarity on that. Oh, I've dropped this in here. If you want these slides, I want to give them to you. Okay. Scan this QR code. You can go hit a site, put your email address. It'll shoot them to you. You have them all. Use them. That's my only ask. We started off this way is use them out in your market to get the message out. Tristan, you do a great job of that. You're always posting and getting the message out there and use that. So we'll hop on from that. But Greg McBride at Bankrate said this: home price appreciation may be tepid. He's talking about this year. When looking at a 30,000 or 35,000 foot view, many markets seeing little or no change in price, but rising inventory has some formerly hot markets shifting to a seller's market, to a buyer's market, and will be susceptible to price decline. Certainly seeing that happen. These are 8 forecasters that we follow that have updated their forecast for price appreciation here. And you see the majority of them say around 3% price appreciation. It looks like a couple, Redfin and Zillow, saying we will fall in price in this country, average about 2% home price forecast. If you were to ask me, nationally, somewhere between 1% and 2%, very flat, anemic price growth in this country, but not a sort of massive price departure. Back in, it's very interesting. Back in 2008, in the great financial crisis, homes lost about 20% of their value nationally. Biggest drop in value ever in this country. I'll also tell you another couple of things I'll just rattle off real quick here. Last year in this country, there were just over about 300,000 foreclosures. Certainly don't want to see anybody foreclosed on, but it is a fact in our business. It happens. Back in the great financial crisis, there were 9 million. So,
wow.
So 300,000 last year compared to 9 million. The way those numbers shake out, the most recent foreclosure numbers in this country, 1 in 758 homes was foreclosed on. 1 in 758. Back in 2008, that number was 1 in 45. So
massive
radically different. Not seeing anything like that. And I truthfully think there are a ton of investors waiting on the sidelines going, hey, when it happens, I'm going to grab 2 or 3 or 4 or whatever the case is. And I don't see that coming.
David, could you go back to the slide where we scanned the QR code? A couple people missed it.
Okay, yeah. I went through there fast. If you didn't have your phone out, you probably missed it. So yeah, grab that. You can get all of these slides. Again, my ask is that you use it and get those out there. If you have any questions on it, you can email me to david@keepingcurrentmatters.com.
All right, got it.
Mike Simonson, the vibes for home prices are growing much more bearish for the rest of 2025. We can see inventory levels, especially in the Sun Belt, are now sufficient to put downward pressure on home prices. It seems likely to continue and spread to more states. However, there isn't much data that shows significant price declines. Agree with Mike 100% on that. I threw this in there. This is just interesting. It's each one of these 8 forecasters where they originally started this year to where they are. 3 have gone up. The majority have gone down, which, again, not shocking. As we go throughout the year, they go, I don't know if we're going to see as much activity based on this. There's certainly a more, conservative look at price, even mortgage rates. Nobody wants to stick their toe out and go, this is exactly what's going to happen, because they don't know. They are a forecast. James Egan at Morgan Stanley said, looking ahead to the rest of the year in 2026, we don't expect mortgage rates to come down much, at least not through the third quarter of this year. So affordability will remain pressured. Totality, Selma Hepp, love all the work she does. The prospect of elevated mortgage rates throughout 25 suggests the housing market activity will continue to be challenged. This is what those that we watch and forecast rates on a continual basis, MBA, Fannie, Wells Fargo, what they're saying. This is a look to the end of next year. So the orange is sort of where we've been. Where are we going to go? I don't see anybody saying we're going to break through 6. Could we? Certainly we could dip our toe. This is all based on incoming data. What's going to happen? So unless you have a crystal ball, you don't know that. But most forecasts are that we go into the lower 6s in the next year. And I'm not saying that wouldn't be a good thing. Certainly would be a very good thing. We want to see that happening. Sales will remain low, but up slightly from the last year. I would say even, probably sold just over 4 million existing homes in this country last year. You see the forecast from all the different houses that sort of predict that. Slightly more homes, but we'll call it flat year over year, no doubt. New homes, again, probably by a hair will sell more, but we'll call that flat as well. A new home forecast. This market is all about how do I get the message out? How do I be the knowledge broker? How do I ultimately show people what is happening so they can make the best decision? I'll throw this QR code up. I don't have it. I was going to throw it up again. Let me go back to it in case anybody missed that. I want to give that to you. I know folks were asking for that. Give you that.
Yeah, a couple of times again.
Yeah. So we'll leave that up there for a second. I want to show you one other thing, a study that was done, and I think is very, very positive for what we do. Hopefully everybody scanned that QR code right here. 49%, there's a recent survey done on home ownership. 49% of adults in this country are interested in buying a home. So a message I want to leave you with, Tristan, I want to leave you with this. 49% of the people, 1 out of 2, let's call that, want what you sell, want what we have, right? That's great news. 31% believe it's unattainable for one reason or another. We have work to do. We've got a job to do to help people understand how they can buy a home. You know, buying a home is the number one way people build wealth in this country. I'm not suggesting that's what it should only be, but it's a good thing. Makes an impact in people's lives and people want to do it. So leave you with that, Tristan. Always great to be on with you and be on with Lofty. And if there are any questions, I'll take those, but grateful for that.
No, everybody was just happy to have you here. The slides, everyone wants those amazing slides to use up and then study and probably put them into their listing presentation as well. So
yeah. I would highly encourage it. Use it on a social post, put it in a presentation, however you can get them out there.
All right. Thanks for being on, man. Appreciate you.
You got it. Take care.